Well, good morning to you. I would say happy Friday because it feels like a Friday. It acts like a Friday, but it's a Thursday. Happy Thursday. It's the final trading day of a short trading week, though. There will be no trade activity tomorrow because it is Good Friday. Markets will be closed. Just want to make sure you're well aware of that. It'll be a 3-day holiday weekend coming up. Although there is a holiday right in front of us, we did get our weekly export sales data on schedule this morning. And I want to bring in Brian Hoops of Midwest Market Solutions to talk about it. And Brian, thank you so much for joining us here this morning. I want to run through these numbers and get your thought on what they may or may not mean, because we did have a weaker trade overnight in the corn and soybeans. Let's see if this may change attitudes or not. I guess the trade actually overnight closed right after these came out, so you would think it would be factored in. On the corn, we had a total of 1.27 million tons sold last week. We had soybeans at only 107,000. Soy meal, though, look at that compared to soybeans. Soy meal, 277,500 tons sold last week. Obviously, Argentina is missing from the mix to a large degree. Soy oil, 27,600 tons, and we had the wheat at 183,400 tons. Now, we also had numbers for grain sorghum, and that number was a big zero. So was it a number or not? We had upland cotton at 176,400 running bales, and we had the rice at 102,400 tons. I believe that was a marketing year high on that rice total. So, reviewing the prices that we had overnight, let's take a look at this corn market here. This actually closed up around 7:45 Central Time. And the May corn was down 4. It was under pressure overnight. We had it at 6.48 3/4. December was down 1.50 cents. In the soybean trade overnight, wow, it kind of took a nosedive on the nearbys. May down 12 1/4. You had November down 6. On the other hand, when you look at the wheat market with these quotes from bar chart, you have Chicago May just fractionally weaker, down 3/4 cents on the May. On Kansas City, we were 9 higher though on the May at 8.70 Isn't that interesting? A big spread change there. Spring wheat was up 5 3/4 at 8.79 1/4. So that's a lot of data to look at here. Brian, your thoughts on the weekly export sales and what the trade overnight is telling us here?
Yeah, good morning, Marlon. It could be kind of an exciting day today as it's the last trade through the weekend. No trade tonight or tomorrow. And then we have trade beginning again on Sunday night. These export numbers, it's pretty much all the China show for the grains here. China was a buyer of half of the corn sales that we saw. They were almost exclusively the entire soy complex buyer, over 5 million bushels there for the week. We had some net cancellations of new crop soybeans. So that's a little bit of a negative tone, but the soybean number that we saw this morning, just over 5 million, almost 6 million tons, that is right in line with where we need to be on a weekly basis to reach the USDA forecast. So, we really don't want to slip any further than that, but the market is trying to price in South American supplies, especially Brazil, because as we talked on your radio show last night, they don't have a lot of storage. They move their soybeans directly from the combines into export channels. They're priced at about $1.75 a bushel cheaper than U.S. soybeans off of the U.S. Gulf. So they're certainly undercutting our prices, and that keeps a lid on rally attempts for old crop soybeans. So, yeah, we don't want to slip a lot further. China's been a very aggressive buyer of U.S. soybeans through this marketing year, over 31 million tons. That's about 3 million more than they had purchased all of last year at this time. So, we think that they've been a decent buyer. Hopefully they'll continue to be buyer because they certainly showed up in a big way on our export sales for the grain markets this morning.
Okay, well, we also had numbers for the beef and the pork, and we'll come back in a moment, Brian, and analyze those numbers and what to expect in our critter trade here on a Thursday when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions, and I do want to take a look at the beef and pork export numbers that came out this morning as well. So we'll focus first on this beef number. It came in at 13,600 tons that were sold last week. And then you had the pork jumping back up to 53,900 tons that were sold last week. And as I take a deeper dive into these numbers here, I see where China bought 0 U.S. beef last week. However, they were back in a big way and bought 20,200 tons of U.S. pork. I thought that was interesting. They kind of come and they go. They either buy a lot or they don't buy anything. And on the beef side, Mexico bought 1,100 tons this week. They were back in there. And, well, on the pork, they bought 14,300 tons last week. So very active on the pork side and maybe not so much on the beef. What does that tell you? And what's the setup for today's trade?
Well, yeah, well, let's look at the pork numbers, and we finally have something good to say about pork. It was a marking year high for their exports. Hopefully, this finally gives us a little bit of a strength. You would certainly think the prices continuing to work their way lower, we'd see improvement in demand. China, once again, was the biggest buyer, showing up over 20 million tons by themselves. And Mexico was the next buyer, over 10 to 12 million metric tons bought by themselves. So that really should help the pork market out recover here. But this cattle market, I think, is the one that's going to draw most of the interest. We're hearing there was some trade very late yesterday, as much as 177 in Colorado. 282 in Nebraska on a dressed basis. That's sharply higher than the trade that we saw yesterday. And this isn't always a perfect indication, but we look at the bid ask as we get close to the opening here, and that's an indication of where the buyers and the sellers are coming into the market right before the opening. Now, these numbers can change in the next 10 to 15 minutes, but we could be looking at 150 to 200 point higher opening in the cattle based off of those numbers. So we could be in for a kind of an exciting gap higher type day in this cattle market.
What in the world would cause that?
Well, it's the cash trade that's coming in. This 282 is well above what we saw a week ago and above what we heard going during the trading session on Wednesday. You know, we heard some cash cattle trade $2 to $4 better, and that caused some hedge lifting as the day went on. But this trade that we're hearing in Colorado last night is at night. The market has not had a chance to react to it yet. So that's what we're seeing on the opening this morning is a lot of buying interest coming into the cattle pits, at least early anyway, and again, subject to change.
That is kind of strange, especially when we had been talking about the fact that packers would probably be able to draw on April contract cattle that might be available now, and they're bidding higher anyway. That is a very curious case. Thanks for bringing that up. Appreciate that. All right, Brian, if I don't get to talk to you before the holiday break, you have a great Easter weekend with the family. Appreciate that. Brian Hoops of Midwest Market Solutions. So,